Both companies are symbolic of a technology convergence happening between U.S. and Chinese startups and the venture capitalists who fund them. One venture capital firm that is a big investor in both U.S. and Chinese tech startups is GGV Capital, which is headquarters in both Silicon Valley and Shanghai. I sat down with GGV managing partner Glenn Solomon to find out whether China's market volatility has impacted startup funding.
When you look at Chinese venture capital, we still see a lot of innovation occurring, many new companies getting formed, a huge growth in investing in early stage businesses. So if you look at seed stage investment in China, there was more seed stage investment in China in 2015 than in any year prior, all cumulatively.
And you believe many technologies in the startup world in China are ahead of the U.S.?
Surprise to many people in the U.S. who believe that China is mostly a copycat market relative to the U.S. In fact, there's quite a bit of innovation occurring, intellectual property being developed in China that is being copied here in the U.S. Some areas that I'd highlight, for example, in the Internet of Things and connected devices, that's an area where China is very much ahead of the rest of the world. One company in the GGV portfolio in the drone space that we're very excited about is EHang. They launched a very successful product at CES this year called the 184, which is actually carrying human beings, in unmanned drones. Other areas in addition to IoT are, for example, mobile commerce and global commerce. So in China, e-commerce is well ahead of the rest of the world, particularly the U.S.
Here in Silicon Valley, it's famous for a lot of young tech entrepreneurs. What is the role of the young tech entrepreneur in China?
I can remember 10 years ago going to China and meeting with entrepreneurs who I felt had great ambition, but were much earlier in their development relative to the entrepreneurs we see here in Silicon Valley. That was 10 years ago. Fast forward to today, the entrepreneurs in China are every bit as strong as the entrepreneurs we meet with here. They have the ambition, which they've always had, but now they've got some experience as well.
Many big Chinese tech companies like Baidu and Huawei have all set up shop in the United States. Why do you think they're here?
We've seen a pretty dramatic move of Silicon Valley companies to China, right? You've got Uber, Airbnb. Now, the reverse is increasingly true as well, as the big companies in China are setting up shop in the U.S. And it's not just the big businesses like Alibaba. There's a whole other class of companies at the level below in technology and lots of entrepreneurs who've done well in China who are personally investing in the U.S. as well. Part of the reason is that competition is fierce in China. Alibaba, Tencent, and others, they compete very aggressively with each other, and they view the U.S. as the new frontier. Chinese companies are getting increasingly good at developing products for the global marketplace. Musically, and they've developed popular teenager and its first market.
Many acquiring. What do you trend?
M&A in China is growing quite rapidly. If you look at activity in 2015, there was something like over 50 M&A transactions that occurred in China in technology. That's a much higher number than we've seen previously, and it's an indication, I think, that the market is beginning to mature in China. Another interesting trend in China, Chinese companies that have listed here in the U.S. as ADRs, depository receipts, many of those companies are looking to list back in China now, and a lot of them have made offers to go private here in the U.S., and the intention would be to take them public back on Chinese exchanges, which I think this is a really interesting trend because it's some of the very best companies in technology in China that may move from the U.S. back to China. This could give rise to even more maturity in the Chinese stock markets.
I asked Solomon whether Chinese tech companies moving from U.S. stock exchanges to ones in China could hurt the U.S. stock market. He said it could indeed potentially affect the number of new IPOs and the excitement around such IPOs, especially since many of the highest valued companies going public in U.S. stock markets are Chinese.